Hello and welcome. Today we're going to break down something that's on a lot of our minds, the soaring price of gold, and more importantly, what it's really telling us about the safety of our retirement and savings. Okay, let's get right into it because there is a major signal flashing in the markets right now. You've likely seen gold hitting record highs, and you're right to wonder what that means. Because what's happening is a really big deal, and it's going to have an impact on all of us. We're at a very strange situation. On one hand, you've got the stock market, which is hitting all-time highs. That usually means confidence and good times ahead. But on the other hand, you've got gold, the ultimate safe haven, also at a record high. That's normally a sign of fear. So what's going on here? This just isn't normal market behavior. It's a huge contradiction, and it's a warning sign that something fundamental is shifting under the surface. So we need to ask, why is this happening, and what does it really mean for your money? To really understand what's happening, we've got to look at why people are buying gold in the first place. For the longest time, gold was seen as a safe, but let's be honest, kind of a boring investment. Well, that's definitely not the case anymore. Now, the most common explanation you'll hear everywhere is that this is all about inflation. You know the thinking. When the dollar's value goes down, gold's value goes up. So people buy gold to protect their savings from getting eaten away. It makes perfect sense, right? Well, here's where the story takes a twist. If you look back to 2022, when inflation was at its highest point in 40 years, a whopping 9.1%, the price of gold didn't skyrocket. It actually went mostly sideways. So if it wasn't just inflation, what is driving gold to these record highs? That little fact tells us that while inflation is certainly part of the picture, it is not the main character in this story. Something else, something much bigger, is going on. The real answer, it turns out, is found by looking at who is buying all this gold. It's not your typical investors. The biggest buyers on the planet right now are the world's own central banks. For decades, the US dollar has been the king of currencies, the bedrock of the global financial system, but that's starting to change. Central banks all around the world are quietly selling off their US dollars. You can see their dollar holdings have dropped from 70% of their reserves down to just 58% in about 20 years. And you can see right here where a lot of that money is going instead. Central banks are piling into gold at a historic pace. For the past 3 years, they've been buying more than 1,000 tons a year. That's more than double their usual rate. This is a massive shift, and it tells you they're concerned about something. We're keeping a very close eye on this trend, and we'll be sure to keep you updated. And by the way, if you like our videos, please like, share, and subscribe to follow us so you won't miss any exciting updates. There's a lot more to cover. So why? Why are the world's biggest financial players so worried? What are they seeing that's making them quietly stock up on gold like never before? Well, it starts with a number so huge it's hard to even wrap your head around it. The U.S. national debt. It's climbing every single day, and that enormous figure is putting the U.S. government in a very tough spot. Think about it like this. The government has to pay over $1 trillion every year just in interest payments on that debt. To make that affordable, they need to keep interest rates low. But, and here's the catch-22, low interest rates tend to weaken the dollar. So other countries holding trillions of US dollars are getting nervous that the value of their savings is set to decline over time. And all of this creates a powerful feedback loop. It starts with the central banks buying gold for safety, which pushes the price up. Then other investors see that momentum and start buying too. That pushes the price even higher, which in turn causes the central banks to buy even more. It's a cycle that keeps feeding itself. So, okay, this is all fascinating stuff about global finance, but let's bring it home. What does all of this actually mean for you, for your personal savings, and for your retirement? The very same forces that are making central banks nervous are the ones that can quietly eat away at the value of your nest egg. A weaker dollar means the cash you saved so carefully just doesn't buy as much. And that persistent inflation? Well, you feel that every time you go to the store. The old rules for investing might not be enough anymore. Now, the main takeaway here isn't a prediction that you should run out and put all your money into gold. Not at all. It's about a timeless principle that's become more important than ever: diversification. In a world where the rules seem to be changing, spreading your investments around isn't just a good idea, it's mandatory. So, how should you think about an asset like gold in your own life? Does it have a place? Let's try to put it into a simple framework. The best way to think about it is like fire insurance on your house. You don't buy insurance because you expect a fire to happen. You certainly hope it never does, but you own it so that if the worst happens, you and your family are protected. Gold can play a similar role for your portfolio. The reality is the world is changing, and the forces driving these trends aren't going away anytime soon. So as we see the world's largest financial institutions preparing for what might be an uncertain future, it leaves a critical question for each of us to consider. How prepared is my portfolio?